So here we are on Stockcharts.com. I'm going to market analysis sector drill down. I think you may have already found this area. Then it shows us, well, now it used to be the 10 sectors of S&P 500. You can see this one sticks out because it's 4 letters in the ticker symbol, and that's the new one, the real estate one. So now it's the 11 sectors of the S&P 500 apparently. So when you click on these little lines, if you click on that, there's different kinds of charts you can look at. So if you click on the point and figure, I'm just actually going to right click and then open it in a separate link, and then it basically shows us the point and figure chart we need. We don't really need to modify it or anything. In fact, this book that I've started reading, The Definitive Guide to Point and Figure Charting, discusses this style of chart, because a lot of them, like if you go to tradingview.com, does not have these little numbers here. If we scroll in here, the 1 and 2, basically the way it works is 1 is January, 2 is February, 3 March, all the way on. Then once 10 is reached, A, B, and C for the last 3 months of the year, October, November, December. So anyway, I'm gonna zoom back out a little bit here, but so I realize you haven't read a book on this yet, and you don't probably know a whole lot about it, but the idea is to get you familiar with it and start getting knowing what you're doing with these charts, or at least know how to navigate them and see what signals they may be indicating. I wish there was a way for me to get rid of this little ad at the bottom, because it's kind of interfering with our view here. Anyway, so I'm gonna scroll back out just a little bit, but there's different settings down here. Basically, I'm just leaving them the same for what we're doing. These are the main settings right here, where it says chart scaling, method traditional. Percentage is a better way to do it, but the market kind of moves in points. Like $10 is like a more likely like support or resistance point than $10.37, which might be the case if you're using a percentage chart, since it's based on log instead of based on individual points. The reversal of 3 boxes, basically what that means is we've been going up in this area right here, then it has to go at least 3 in the opposite direction before it will post anything if there's not a new high made here. So anytime you're in a column, whether it's up or down, up is X's, down is O's, anytime it moves into 87, for instance, we'll just say right now it's at $86.05. If it moves to $86, or I'm sorry, 86 points, 86.99, that is not enough to generate the 87 box. It has to go up to 87.01 or 87.00, and then it creates a new X, which is demand. Okay, so if it does not produce one of those boxes, the next question is, oh, okay, well, did it go down 3 points? So in order for it to make a change of rows, it has to go down at least 3 points. When I say down, point and figure charts often use high and low, not closing values. Anyway, you can do it either way, but usually highs and lows of the day are how they record this, and I think I may have mistakenly told you that it was closes when we met previously. So anyway, so if it reaches a high that goes into this next point, then you can put an X there and do nothing else, or if it goes up 10, you put up 10 X's or whatever, and then and only then do you see if there's something in the opposite direction. So in other words, if nothing happened that goes up further in the row that we're in this example, the demand row of X's, then and only then do you look to see, oh, okay, well, it didn't have a higher high of at least 1 point, so let's go to the next, or let's see if it went down at least 3 points. So it's got or 3 boxes, I should say. So if it goes down at least 3 boxes from where you're at, then you list a new row, a new column of O's, which is supply, which means going downward. and then it follows the rules the previous column just followed. So in other words, now all of a sudden this is the primary row. If it goes down even one extra box tomorrow, for instance, then you write an O, and only then will you check if if it does nothing, only then will you check to see if there's a reversal of at least 3 boxes in the opposite direction to go back to demand. So anyway, that's the basic premise of the chart. If you watch the video I'll put in the description that I watched yesterday, all of this will make sense. I mean, that video is an incredibly informative video. And there's also a second video I found on point and figure charts using this very Stockcharts.com website. So they're using the exact chart that we're looking at right here, and it's like an hour-long video. I'm not going to ask you to watch that one, at least not until I've watched it, because I don't know if it's any good or if it's a waste of time. I'm guessing it's pretty good, but I'll put a link to that as well. So anyway, I know you don't really know what you're doing, but if you see anything that stands out, like to me this one just kind of looks blah. What you'll notice is there is a triple top pattern right here. Usually that's a big pattern. You see this row of X's, like there's one X here and then another X here. If anytime the second row of, or the second column of X's exceeds the previous, that's kind of like the basic buy signal. So here it looks like we've got what looks like a resistance line. Here it was close, but it didn't quite reach the resistance. But here we kind of reached a resistance line, and then it tried it the third time, and it looked like it pushed through it. And so that actually would have been a buy signal, even though it looks like it reversed and stopped us out or whatever. But anyway, it's just a way to analyze the market, and so you just doing this will help you kind of get a pulse or idea of the market. Like for instance here, if we look at I'm going to zoom in just a little bit here. You look at 5. I don't know why there's no 6, because that's the next month after 5. But anyway, here's 7. Then there's only 1 box difference before 8. Then only 1 box difference before 9. What that tells me is this is not very volatile. This thing is moving really slow, because it's only moving, at least according to the box size that we have, which is what in this case it looks like it's maybe 2 points, because it goes from 110 to 112 to 114. So it tells me it doesn't really move around a whole lot. So this is not something, if you're looking to day trade or something like that, you probably don't want to day trade this exchange traded fund. Of course, a lot of this is really just kind of to tell you what the different stocks and things inside of this sector are doing. So anyway, it gives you an idea. So you look at this one. Yeah, so these are basically when you see the S&P 500 went up X number of points or down X number of points, it's basically a consolidation of all of these different sectors in the S&P 500. So it gives like the average. Some are up, some are down, and overall it gives us the average, just the S&P 500 itself. So alright, so we checked that one out. That one's, it's on an up, I guess you would call it an uptrend, because it's in the column of X boxes, and it's above this trend line. I think they might even call it a support line. Anyway, so let's go to the next one real quick. Okay, I'm going to click that, and then I'm going to open that one in a new tab. Okay, this one is the technology sector. Let's see if tech is hot. Ooh, tech is hot. Look at that. So again, that's that basic buy signal right here, and it looks like it failed again. So it does look a bit overextended, but I think you're supposed to take the signals regardless. Kind of, this is the idea. When you see that pattern, you kind of are looking to trade this area here, and then reverse once it goes down. Anyway, there's different strategies. I'm not really going to tell you what to do. I'm just telling you kind of what the author seemed to mention in the previous video, if I recalled correctly. But I would suggest watching the video and getting an idea of I mean, the guy has a complete system of how this works, and he explains it pretty quickly. And then also this book that you're going to be receiving that I'm reading also discusses all these things. But here's another thing. It's forming kind of a triangle, so that creates breakouts that you can trade. Anyway, I will talk to you soon. How do I turn the video off?